have started practicing. And you can say, one, I got message from one of your batch member, but he has taken it very seriously, and one strategy uh, he is going on testing it. So that, and many of you should test like this. So it doesn't take a big time. Only thing is that concentration is required. So he has done. This is debit calendar spread. What a fantastic presentation he made it. You can see debit calendar spread observation. This calendar is only profitable in the moment more than 500 to 700 point. Don't wait till the expiry to square up the position. So this is what the conclusion he has derived. Calendar profitable when the movement is more than this, and if the strategy should not be held till expiry date. This is the conclusion from 2021 till date. Every month wise the participant has done. So because I do not know his name, if he is present in this forum, he can just say it is his experiment. So it is a thing he has sent. So this is the real way of learning. Simply sitting in a session is not going to make you a winner. Money, Manisha Apteji, it is done by Manisha Apteji. So Manisha Apteji, I really appreciate your work. Manisha ji is there in this forum. Manisha Apteji has done it, and this is what I need. This prompts me to such kind of students or such kind of interest always makes you happy, and you intend and tend to give more. And if you are just a silent spectator just coming there, I'll get a mantra and from there that mantra will give me the success, this session will disappoint you. You will not get any mantra, secret mantra from me. I have taken a VIX based estimation. Many people had really many confusions. They have been sending me all their calculations, so that I will clarify. So what we did on the first day of August, recall what I said, first day of August, what is the VIX and what is the Nifty spot level. So these two values we are taking. This VIX we are converting to a monthly VIX, and monthly VIX we are bringing a monthly price range 579. So far the historic evidence says that this VIX based monthly estimate is accepted by the market, and it is given more than what we have expected. That too, in which term the high and low difference of the month will give us a 579 point of depth. The difference between high and low for the month of August will give us 579 point of depth. Our mission is to catch a part of this movement. I repeat, 579 point of depth in August it will give us, and that will be between the high and low difference. It is not 579 point from where I am standing. It is between the monthly high and monthly low. We are going to get more than 579 points. That is what our VIX based calculation says. Now next part is, out of this 579 points, how many points we are going to capitalize in terms of profit. So for that reason I have used the Fibonacci ratio 0.38 to 0.618, 0.786, all these ratios. In between 0.888 also there, 1 is there. So I have not taken all, 0.5 also there. I have taken only key ratio 0.38 to 618, 786, 1.236, 1.618. You can put 0.5, you can put 1, you can put higher ratios also. Then we have derived 221 point, 358 point, 445, 716, 937. So four probabilities I have told you. This 579 point can straight away go up from where? From the low formed on the day one. Day one low was 19,704. From here, if it is going by 579 point, then the depth of 579 point can be created, or straight away it can fall from the day's high, first day's high, 19,796. So from here, that is two probabilities. Third probability is what? It can create a new high, and from there new high we have to reduce by 579 point. The depth it is going to create. So understand, this is not the trading levels depth. What is the depth? 579 points. New low is being created. Then from here it will climb by 579 points. Then only that depth will be maintained. So this is what this concept says. Now our job is, out of these four probabilities, we understood four probabilities can be created. 579 point of depth will be created between high and low. How we are going to capitalize in terms of profit? How much point out of that we can take it as a profit? So trade alternative comes here. Again repeat, trade alternative. After understanding all these things, your trade alternatives comes into picture here. If Nifty after 1st August, very carefully listen, after 1st August or first day of the Nifty, if the Nifty move 221 point up from the first day's low, then you are going to buy. If the Nifty going to fall by 221 points from the first day's high, you are going to sell. What was the first day's high? 19,796.6. From here, if it is falling by 221, then I will expect that it is going to fall remaining points to cover up this 579. So out of this 579, 221 point gone, remaining point it is going to come. So it will cover off that things. So based on that, you calculate what level you are going to sell Nifty. And if you are selling, you hedge it. That is up to you how you do your money management. So hedging is your domain. Whether you sell, if buy options, you can sell some options. Anything you want to do, you can do that. So this is how this particular method should be treated. When that new low is being created, new high is being created, what you have to do? New high is being created, new low is being created. That time you need to change this calculation. Say now new low is being created, 19,296 created. So I have to, between the high and low, 19,796 and 19,296.6, 499 point movement happened. How many points happened? 499. Remaining, if 70-80 point it falls, it will cover up entire 579 point. But this also gives you a great other understanding. Though it has fallen 499 point, so it is falling 358 to 455. It is in the Fibonacci range of death retracement. Means after falling 455 point, there should be a upward movement. That has happened. And yesterday it has gone to 19,500 and odd, 518. In fact, it has closed at this Nifty spot I am talking. Nifty 19,518 level. So new low is being created. So from low, all this high will be calculated. Means if you just click it here, so this high is what? 19,875. It is new low 19,297 added with 579 points. This is expected to complete that depth of 579 point. Nifty may climb 19,876 point, or Nifty has to fall below 19,296 to the extent of another 80 points, so that this 579 point of depth can be created. Now Nifty has not fallen, not continued that fall. After falling 499 point, it has gone up and it has closed at 19518. That is also 0.38 to retracement. Definitely now next level of retracement or fall can happen at this level, 19654 to 751. Why? It is 6.618, 0.786 retracement. If this continues or this gives a penetration, then 19876 will be created and it will complete this 579 point of depth between high and low for the month of August. This is what I have told you in the first program. So this requires you till that day to till today, every month, whatever the VIX has told you to give, it has given you. Question comes, why the first day? Because last week of the settlement, there will be a post settlement. There are few days will be there. Rollover will happen. Those rollovers will go for a realignment. All this adjustment takes some 1 or 2 days time. And once that settle down, first day of the month sets the trend for the entire month. It sets the trend for the entire month that I told in the date. Without practice, everything zero. Without practice, everything zero. 579 point came. No, sir, you told, clap to you. You are very happy. We are happy that you told 579 point, it has come. That happiness I do not require, my dears. My happiness are you people. If you practice, you deliver, you get success. That is my real happiness. My happiness is not sitting that some calculation I told 19579 coming, sir, 19578 has come, 5118 come, clap to your calculation. I do not want that. Trades are the only trades where you can able to carry your losses. Means you can carry. This month it did not work for me, it will work next month. Next month it did not work for me, it will work after 3 months. It is going to work in any month. That capacity the box spread has. So when it has that capacity, so we have to work for that. So what is a box spread? First we have to say it has having two: credit box spread, debit box spread. Debit box spreads are being initiated when there will be a 40 to 60. 40 point will be debit, 60% will be reward. Out of 100 point of risk, 40 rupees will be risk, 60 rupees will be reward, and that will be that will be the parameter for the debit box spread. Credit box spread is what? I'll be buying a deep ITM call, in the money call or put. Sorry, I'll be selling a deep ITM call or put, which will be having full intrinsic value. Along with that, one ITM call I will be hedging it, I will be buying it. One deep ITM I will be selling, another ITM I will be buying. Both will be ITM. Same way, deep ITM put I will be selling, buying a ITM put, that also is a box spread. If this buying side of option convert from ITM to ATM at the money option, then the same strategy will be known as iron condor. If both are in the money, it is box. If one is in the money, one is at the money or OTM, then that is known as the iron condor. So both the strategies realign with each other with a very small string of thought process. That is what the box spread is. Now, box spread, once you are forming, box spread like calendar spread, box spread can be formed in different ways. So objective is first important objective of box spread. What is objective of box spread? If this month the box did not work for me, after 6 months it will work, after 5 months it will work. No trend is permanent in market, trend can change, and box spread alone cannot give you the strength, or it can alone cannot make you successful. To be successful in box spread, adjustment also required.
So that we will see. So adjustment two types again. First session, pre-adjustment, post-adjustment. So box spread, if you are taking in bigger quantity, more than 4 to 5 lots, pre-adjustment you should do, and if required, you can do a post-adjustment. So now you understood box spread means in the money option will be involved. Example, say Nifty is at 18,700. 18,000 call option I am selling, credit box spread. I am buying 18,500 call. Both are in the money. Have a look here. 18,000 also in the money. 18,500 also in the money. Nifty is at 18,700. Same process. I am buying 19,000 put, selling 19,500 put. 19,000 put also in the money. 19,500 also in the money. Depth is your choice. You can put 500 point depth. You can put 1,000 point depth. You can go for 3,000 point depth. Depth between these strikes. However, all four strikes, when you initiate, that time they will be in the money. After that, once they will become out of money, anyone becomes buying side, become out of money, you will be at a profit. So do not worry about the situation what will unfold after, because after 5 days if one is becoming out of money, that don't think that no, I have to again make it as a box spread. No, your job is over, because you made the strategy for a profit has come. Now this combination, you understand, this type of combinations are known as box spread. That is what you have to understand. Then 70 rule comes here. 75 to 85% of spread difference should come to you as a credit. What is that? Between 18 to 18,500 there is a depth of 500 points. Here too also depth of 500 points. Out of 500 point, 75 to 80 means 375 rupees to, means this call you are selling, this call you are buying. By this process, 375 rupees to 400 rupees credit you should receive. This is minimum you have to receive. If you are getting too much, 95% profit will not come, but this much of money you should at least get. Less than 75%, that box spread is wrong, the strike is wrong. So 75 to 80% credit you first upfront you receive. Once you receive that, how much is remaining? 100 point only is your liability. So this 100 point liability, when it will happen? Consolidation. If your Nifty consolidate between 18,000 to 19,000, between this price, never move above 19,000, neither fall below 18,500. So what happens? Put side also will lose, call side also will lose. There will be a 200 point liability will come. So that is the consolidation is your risk. So this consolidation risk will happen if the Nifty consolidates between your buying strike call and buying strike put. That is your risk. So risk is there means without risk there is no reward. So this risk is there means there is a way we can get over this risk. So now we'll be going for getting over this risk by some pre-adjustment or post-adjustment. But I do prefer in box spread post-adjustment. But if you are so much nervous, so much new to the strategy, then you go with the pre-adjustment. What kind of pre-adjustments can be done here? Straddle. Straddle should be initiated in such a way that 75% of your spread loss should cover. So here every time I am using a term 75% credit, 75% of spread loss. Why not 100% of spread loss? If you make it 100% of spread loss, what will happen? This strategy will become theta 0, delta 0 and vega 0, all three. So it will have theta as 0, it will have delta as 0, it will have vega as 0. So all three Greeks will become 0. You will be very happy to see this strategy. Strategy will not give you any profit, it will not give you any loss, only it will give you happy feelings. I found no loss has come, no profit also has come. Okay, but that is not the objective of the strategy. Strategy should give you some profit. So for that profit, how it will be created? We should have a 75% of spread difference we manage. So 25% is there. That 25% is a great profit. So I'll tell you how the profit comes. So this is also is very important. And number of lots, if it is 5, pre-adjust 2 lots. That is also you can do. Post adjustment can be also done. Short strangle you can do. Short straddle you can do. So if it is this kind of long strangle can be considered for post adjustment if the volatility above 20%. So there are different adjustments you can do, pre-adjustment, post-adjustment. One pre-adjustment related things also we'll see. One post-adjustment thing also we'll see. Both the things we'll see. So here, see, this is how the box spread combination is, and it is having a pre-adjustment. Pre-adjustment, simple box spread. Have a look here. What happened here? Nifty is at 18,197. So whatever I want, both the call and put both will have in the money. I am selling a call option 17,500 in the money, ITM. I am buying 18,100 call option in the money, ITM. So this is one part of the box spread or call box spread or half box spread. Any name you can say. Call box spread, half box spread, or you can say only one part of box spread. Now we are going for put side. 18,300 put, this is also ITM. 19,000 put also ITM. Though here I have taken only 400, it's a 600 point gap. So depth is 17.5 to 18,100. What is the depth? 600 point. How much we required? 80% of 600 point. So 480 rupees we required. How much we are getting here? So 350, 817, here 60 paisa, here 6. So you can see here 0.6, here also 7 minus 1, 6. Then 11 5 are 6 and 7 3 are 4. 466 rupees credit we are getting. Out of 600 rupees, 466 rupees coming to you as a credit, 130 rupees as a loss or liability in the call side. Put side also we'll see. We are selling 19,000, it is in the money, 18,300 in the money with respect to spot, not with respect to future. Then difference comes here, 746 and 258, 65 paisa nullified. So 16, 8 as 8 and here 3. So 13, 5 as 8 and here 6 is there, 6 put a 4. So is it correct? 488. So 6 I carry it here, borrow 1, 16 8 is 3, again borrow 1, so 13 8, here 6 6 2 are 4, so 488. So here credit 488, here also credit 466. Depth is 600, here 700 point, here depth is 600 point. 700 point I required 700, 75% to 80%, 560 it comes there, and here 5% if I can take, some less, somewhat less I am getting, not 75, slightly less. So now question comes, one place I have near to 140 rupees of risk in call side, another place 700 to 488. If I say 490, then 490 10 500 210 rupees as my risk. So if Nifty consolidates, very carefully listen to it. If currently Nifty is at 18,197, if Nifty consolidate between 18,100 to 300 for entire month of January, my loss will be 200 point plus 100 point plus this 40 plus 10. So it is near to 350 into 5, 17 to 18,000 rupees my loss will be there. How much we have to manage now? 75% of that we have to manage. So what I am doing here, I am selling a 18,400 call. So this call is
put options, the buying strikes above strike. Very carefully see. What I am selling? 18,400 call. This 18,400 call is above 18,300 strike. If I sell 18,300 call, then if market goes up this swing, I will not make any money. I will make zero money. Strategy will not land in loss till 19,000, but zero money. So I am giving a depth of 100 point. So 18,400 call I sold. Here too also 18,100 call is there. So I am selling on 18,000 put. Both OTM call and put I am selling it. Pre-adjustment concept. So here pre-adjustment, we do not want to carry the consolidation risk. We are pre-adjusting this particular strategy. So whether it is understood to all of you or not, if you do this particular adjustment, what is the outcome of this? Say option strategy tool, if we'll go and we'll see how much the liabilities, and so whatever we have learned, same thing we are going to put it in action here. 2023 January, 2nd January, and going till 31st January, Nifty is lot size as 50. Load the data. So once the data comes, the testing tool should be utilized by you vigorously if you want to get success in option strategy learning. If you do not use this tool, there is no use of this program. So that is very important. So here 18,197, quickly tell which are the strikes we have chosen there. Anybody remembers? 17,500 call, sell, based on which concept? 75% credit we should get. January call, we are getting 18,100 call, buy 18,000 also you can give. Then I am going for January put option, put I am buying, say 18,300 put I am buying, and I am selling January 19,000 put. What is my risk? If I do this much only, what is my risk? Anyone will tell? What is my risk? If I do this much only, if the consolidation happens between 18,100 to 18,300, then this is the risk. This much I have to lose, 350 point into 5. So you can see everywhere 350 point is almost coming to 17,000. It has consolidated between this, in between somewhere it has gone to 18,000, 17,900. Then that time also one side triggered, another 8 900, then come up, then consolidated. So all the time if you see 18,100 to 18,300 level, it has consolidated. In between few days it has gone to 17,850 and all. Still I did not make money. One day also did not come in profit, not even one day. And finally 350 point, what we have expected, 350 into 50, so that 15 17,000 loss also has come. You have seen this. Now how to convert these things to a opportunity? So go with my second pre-adjustment things. We are selling a call options of 18,400 along with the strategy. This can be improvised also. It is, if not pre-adjustment, we can go with the post-adjustment. You can go with the VIX based estimation. Many ways you can do it. Only thing is what is required. I need to think how to use it. So 18,000 put option also we sold here. See the result. Earlier what you have seen, maximum 15, not even a single day was in profit. Maximum loss you have triggered as 15,000. See this pre-adjustment, once it is added along with that, entire things changed. Maximum loss you have triggered only 435 rupees. Maximum profit has gone to 1,900 rupees. And though consolidation happened, you are safe here. But here 2 3 contradictory things will come. and that contradictory things will come from which quarter of the what kind of thinking also I'll tell. People after seeing all these four legs, they will say that, ha ha, this has resulted the profit, because we are very stock market people, we are very good at numbers. So we'll say this has come onto a profit. Then why we have taken this? We should have not taken this part, only we would have taken this short straddle or strangle. Then that could have made this. That is a conclusion, because that month market has behaved like this. That's why you have got this both the things as a positive something. But if it is not a consolidation, if it is moving up by 700 point, 500 point, falling by 700 point, 500 point, what could be the things? First point, this is a pre-adjustment related you have done. One thing makes sure, after initiating this strategy, we will not make any pre-adjustment. Say these four legs we have initiated. Very carefully listen to this. Four legs we have initiated when Nifty was at 18,197. It is the first day. VIX based estimation says on the month of January how many points? Month of January, VIX based system said 766 point of move will happen between high and low, and that high and low is not happening in the first day of the month. This 766 point of move did not happen in the first day of the month. What we are seeing in this software, day end what is the price, day end what is the profit and loss, we have realized day end of day. But in between also Nifty has gone to a level of, so January month, this was expected high, expected low. It has made a high of 18,251, gone to 17,405. This has happened in January. 846 point of movement happened. We have expected 766. Out of this 766 point, what is my trend decider? 0.382. 0.382 Fibonacci. Means the moment 300 point Nifty falls, it decides the downtrend. Nifty rise by 300 point, it decides the uptrend. This is what VIX has taught us. So what we have to do post adjustment, I have given you the idea, you tell me. I will not do these two adjustments. I will not do these two adjustments with the strategy. I will look into the VIX, and VIX is telling 766 point of movement is going to happen in the month of January. 293 point of plus or minus are going to have a trend decisions. Plus or minus 293 points are going to decide my trend. So how I can form a post adjustment? Think on this and give me an answer. Based on that, decide when the post adjustment should be done. That definitely will be a sell of a call option or put option, no doubt about that. But that will not be done with the strategy. We'll be waiting for that situation to happen, then we'll enter to that particular selling of a call option or a put of down move, anything, because this is going to happen. First day, everything, all 766 point of move did not happen on the first day of January. It is going to happen. So either it will happen in upside or downside. So when Nifty will come down by 293 points, listen very carefully. When Nifty will come down to 293 point down, that time only I will form this adjustment. What adjustment I will form? What adjustment I will be forming? I will be selling the put options on that time. I will selling the put option that time. No need to sell call option. Only put option I will sell on that time, or 11th January when it comes to 293 point. So let it fall down, because one side is going to give me a great profit. I am going to form this. After that, if market goes up, okay, it will create a depth. Based on that, I will see that how many points up move it is going. I will sell that time the call option. That time I am going to sell the call option. So this is how it need to be done post adjustment. understood with the strategy that anyone can do. But this profit of 1900 point, 1700 point, it will come, lesser profit will come. We want somewhat more profit. If we are going to engage the same money, why we should not expect more profit? We are going to have a more profit. So once we want to have a more profit, so here month I let it not cross. We do not worry about that. So 18,490 when it comes, 18,490, 490 comes. But what we have to sell that time? Saraji, you have told me it has fallen 293 points. 18,490 did not come. 18,197 minus 193, 293 point, whatever price comes. So there we have to sell 18,197 minus 294 we will reduce. Whatever value comes, there only we are going to sell. So what we are going to sell here? So 100 point gone. So it is, you can say, when the Nifty spot will come near to 17,900, when the Nifty spot comes to 17,900, that time I need to sell a put option. But which strike sell put options we have to sell? When Nifty fall to 17,900, call option, forget, call option would have been decayed by that time. So we have to sell a put option. Only this is there. Because when it fall, we will sell put option. When it goes up, we will sell a call option. We are not going to enter both the things at that time. Which strike put option we are going to sell? 18,000. What you have decided on the first day? Same. Though that time 18,000 put option will be in the money, but you have to sell 18,000 put option on that day. On that day. So when you should book the profit? If Nifty fall down to 17,500, you have to book the profit. So this wing will be profit, this will be at a loss, these three wings will be at a loss, these two wings at a great profit. So that time you will be booking the profit, net profitability will come there. So here that is known as your post adjustment. What is pre-adjustment? Along with the strategy, take it, forget it, no need of mind work. What is post-adjustment? Look into the VIX level. Once the VIX level is giving you that kind of proper breakout, you sell part, and you can save one part of money also, because here you are going to only one leg you have entered, other leg you have not entered, so let it be there. So but that profit will not be, you can say here six, you can say that profit, if I do not sell call option, that profit will go off. No, not like that. Say on 11th or 10th, whenever that value has come, 18,000, 17,900 or something, so whatever the put option you could have sold at a price of, the put option what you could have sold in the first day at a price of 147, on that particular day you may be selling that same put option at 247 or 300 rupees. 300 rupees. So that put options will, yes, after the price fall, sell the put option. After the price rise, sell the call option. Only one option you are selling, not both. So after price rise, sell a call option. After price fall, sell a put option. Only one option you will be selling. So the put option, if you would have sold here at first day 147 rupees, and if you are selling at 11th of this thing, it will be almost 300 rupees. So 300 rupees. So that much only you have got. So here you can say that 300 into 50 is 15,000. Here hardly some 16,000 rupees has come. So in fact it was a special month, it has consolidated there. But what will happen after that? If there is a trend reversal happens, all wings at profit, enjoy a higher profit. If after that, if the fall continues, goes to 17,500, then this wing only will be profit, other wings will be at loss. So that also net of basis will give you more profit than this. So that also you can test. So my idea was to tell you how to do post adjustment. Post adjustment taken lesser money. How to do post adjustment cannot be done with the strategy. Post adjustment can be done afterwards, after you initiate the strategy. It is a staged entry you have to do in the post adjustment. So that you have understood. Now moving to next part, types of box spread. What are the types of box spread are there? So what are the types of box spread? So this is after pre-adjustment is done, market fallen, and this call side what I have sold, I will close this one and I will have that put alone. That also is a possibility you can do. So that also convert to a post adjustment. So nothing wrong in that. Have you understood this? Paraji is telling I will form a pre-adjustment after, if market going falling, I will call this call option, I will close, remaining put option and remaining I will hold. That is also a correct idea. After initiating, say market goes up, so this one he will close and remaining he will hold. That is also a good idea. So many different ways you can form. This is not only one way, many different ways you can post adjustment you have to do. But post adjustment should have a background validity. Simply my mind says I will 50-point profit, close it and come out, not like that. So this process post adjustment, when you should do that time, VIX should be validating your calculation. Yes, based on VIX this much profit point has to be moved, this is moved, or this much more is going to move. So that kind of validity should be there. Price fallen by 0.618 to 786, there will be a retracement. That is the proper time to close the call options. So this kind of VIX based calculation should back your thought process. So mathematical backing of your thought process is very important in trading. Trading, you can think many things. One trader will think that no, I feel market will fall, I think this will happen, I thought that will happen. So that is I. Market is not you. Market is not asking you. Market is driven by millions of minds like you. Millions of traders define the trend for the day. So you think that market will obey, it is not possible. So next process, we can ask everyone what you are thinking, Ram, what you are thinking, Sam, then compile that data. That is also impossible. What next is left out? Mathematical calculation. Mathematically we can read their thinking. So what is the process? VIX we'll use beta decoupling, we'll use Z score. So all these things we can use. Every strategy you go for a enhancement of a box spread. What are the types of box spread can be formed? Credit half box spread in put with bear call spread in uptrend market. Credit half box spread in put options and having a bear call spread in the uptrend. When I say uptrend market, always conclude that based on the VIX, market is given a uptrend breakout, means that much plus point it has moved. Credit half box spread in put in current month and debit half box spread in the near month. Credit half box spread in call in current month, debit half box spread in the near month. That also you can able to see. These are all based on the trends. So have a look here. First one, credit half box spread in put, bear call spread in uptrend. This is how it look like. Credit half box spread. So I have taken for the July, you can say 3rd July to this thing. 19, what was the year? 19,322, 19,400 put I am buying, 20,000 put I am selling. So here 600 points are there, but my credits are less. 600 points means 80% of 600, 480 points, 70% of 600 is 600, 70%, 350 points, 350 plus another 50 point, if a 5 point I. So what I am done here, one credit put spread I have done, credit put spread I have done in the half box spread manner. Then I have sold or debit call spread I have added into here. So this is what the profit is coming, I told. So now question comes, can this profit should be increased in this strategy? Think a while. How can I increase this profit? This is month of July. July, we have started somewhere, gone to a level. You can say July, we have so July values, if you remember, you can just tell me where the July we have been. So July of 2023. So 2023 July, you can say 1st July, 3rd July here. So we have started with 19,332, 332 here we have. And can this profit should be increased? Beer spread in the beer call spread next month will not increase the profit. Parasji is telling, if instead of current month if I increase next month, whether the profit will increase, let us try. What is wrong in that? So July month, whatever we have done it there, so let us try it. So let us try the July month data and see. Parasji is telling, instead of selling the June month call, if I go for the July month, can I get a more profit? My objective is to get a more profit. So how I should get it? So that is 3rd July I have taken, 3rd July. I have taken till 26th July. You can extend it for some more days also. So what we did, uptrend market is going to set. So we will be taking this thing. Can this strategy should be initiated? 19,400 put, 19,400 put. This is what I have taken. I have bought it and I sold a put of 20,000. 20,000. This is being done. So credit 418 rupees, and Parasji is telling, instead of selling 19,400 call of July, if we'll sell 19,500 call of July, one lot, and keep the same July, because we have to hedge this also. July 20,000 call, if we will keep it, whether the profit will increase, slightly it may increase, but let us see what it is showing. That is very important. So Parasji is telling, let us do this one. So 1,800 rupees Parasji just profit was giving. So 19,500 call I sold, as you said. I bought 20,000 call, as you said. So what I am getting here, I am getting losses. Whatever was there, the profitability, that also come to the losses. Finally I am landing at here 1,700 maximum it has gone, but finally I am landing at the losses. Why it happened? Because theta will become imbalance. So if you have a longer term view to hold it, you can think of that. So here 19,500 call, if you are taking, we are getting a profit 2,000 and it is a great. But when you add the next month, what happened? Third leg is August. If you are making, no profit is coming for us, instead of loss is coming. So here I will tell you why it has happened, and why Parasji has told this also. I will tell you. It is not the problem with Parasji. It is the problem of 99% of traders. What you want? 99% of trader, what they want? Profit. We should work once, profit comes. Next time I should not put my brain. That's why Parasji told that, is there any shortcut way? Instead of selling 19,500 call, if I can sell August month, it will happen. Profit will more? No. We have tested it. We have sold August month call here. Call option of August 19,500. We sold and we saw the result. Instead of profit of 1,000, whatever we are getting there, here it is reduced profit, and majority of days we have into loss. Reason one thing we missed there, but August month is maintaining a premium, and that premium of 150 point, 200 point is not going till the December. July is not ended. Now market in that kind of situation. Market in a situation where the premium of the near month and current near month and far month never rebalance till the first month's or the current month's expiry is not over. So that is what is happening in the market, Parasji. So market is supreme. Our thinking is not supreme. Theoretically, you are correct. More premium I will receive, I will make profit. But it has backfired. Nothing happened. Why? August maintained that same 150 point, 200 point of premium. That is the thing which has killed our thought. So this process can be improvised. How? That is very important. What I did here, I have a look here. 418 rupees credit I have received, and here how much I have received? How much I have received? 125 point credit I have received. Total how much I am getting? 8, 5, 3, 13, 2, 1, 3 and 4, and here 4, 1, 5. 543 point I have got. 543 point I got. How much the ideal things I have told you? 418 out of 600. Out of 600 point, 418 we received. So 291 as 8, and here 54 as 1. So 181 point out of 181 point, only 70% we required, or 70 plus 100 rupees only we required. We don't require 125 rupees. We required 100 rupees. So that 100 rupees to get, it will slightly change it here. Instead of 500, we will go to 600. So here 20,000 also we don't require. We will go to 20,100. So we require 100 rupees, slightly less comes also. It will be good only. So here, so buy edge. So this also should be sell, buy. See the profitability, which was 2,000, it has gone to 5,000. Profitability doubled. What is there? We required out of this risk, only we required 70%. 75% of that risk should be covered, or 70%, 65% risk should be covered. So slightly more risk will take. So slightly, only 10% risk we have. Instead of our 180 rupees, we are getting 125. I am telling that not 125. You just take 100 rupees. So that's enough. 100 rupees, 90 rupees you take. 80, 90 rupees you can just keep a. So risk lightly you increased. Slightly you increase the risk. So result also increase. Profit almost doubled. So that is how you have to think. July month forming credit work spread, debit work spread in the August month, and profitability. Have a look at profitability and tell me why this profit came. Uptrend also. This also uptrend. In uptrend only, not at all consolidation. Uptrend you have moved. Great profit you have received, and it has gone to 7,800 when the Nifty is at 99. Finally, it is settled down also. After that, some fall happened. It has settled down 5,000. So hundreds, few days you got few hundreds of losses. Then uptrend sets in, you got a good profit. The reason is always that next month or the August month, this August month contract was having this August month contract because of its premium. August month is at a deep premium, 150 point premium. 150 point of premium made these spreads cheaper and made these spreads costlier. So costlier spread you are selling, cheaper spread you are buying. So uptrend, it is a very suitable strategy. It is a very suitable strategy in uptrend. You can see here you are getting 418 rupees as a credit, and you are giving 300 minus some 315 rupees as a debit. 315 rupees as a debit. Ideal condition, 100 rupees if it maintains a difference, means if you get 100 rupees credit upfront minimum in Nifty, this strategy will be a viable strategy. Less than 100 rupees if you get a credit, this is not a viable strategy. 418 rupees you are 418 rupees you are receiving credit, 315 rupees you are giving credit. So what happens in uptrend? It is beneficial. In downtrend it will be damaging, because this 315 you have given, you will get remaining. 418 you have given, means received, you have to pay remaining. So that downtrend, it is damaging. If it is a deep correction happen by 1000 point, you will make a profit. Small correction, problem. Up move happened, any up move happened by 200 to 300 points from 19,400, it will be profitable. One reason. Second reason is it maintains the theta as 5 rupees. When this difference is 100 rupees, automatically it makes your theta 5 rupees. Automatically. If the receiving premiums and the giving premium in Nifty, if it maintains 100 rupees difference, then you can say slightly more than 100 also good. Don't think that 100, maximum you can say 150, 175 also you can go. So if that maintains, this also is a good strategy, excellent strategy. So no problem, let it reduce. Now it is 10. How you can say that it will be going to 5 next month? Next month what is going to happen? It is not going to reduce for next month. So it can happen for this month also. So next month if the volatility is falling, that doesn't mean that next month only will get impacted. This month also will get impacted. Idea is what? That is more important. Next month what is going to happen, next day what is going to happen, that is not at all important. Important is what? Credit should be more, debit should be less. Credit should be more, debit should be less. That should be. If deep correction happens, all will become deep in the money. This 350 will give you 150 gain. This 418 will take 80.70 point is guaranteed for you. If uptrend happens, definitely it will come with the slight fall in the volatility or IV, and theta is your gainer. Yes, we are making theta as our component of gaining. Theta is going to give you the gain. And second factor is here, the deep in the money call of put option what you have sold, it is almost equal, because here what happens, one is in deep premium, so it is hardly some 70.7 point difference is there. This 97 point of difference what you are getting in the at the money option or just in the money option, that is your gain factor, and it will give you more than that also. So that, have a look at this particular strategy, this kind of strategy in uptrend. Second, third alternative, half box spread in call in current month, and third alternative, call current month, debit half call in the near month. This also you can have a look. So this is put part you have seen, call part you see. Now 18,500, 19,000, suppose 19,300 I have taken. Same I have taken for August. So here you can say that August is at a premium. So how much you are getting, how much you are giving, you just have a look here. 929, 261, 19,300 I am taking. 929, 261, or you can say 30 paisa here, here 7 and 6 and 667. 667 in how many points? 800 point. Out of 800 points, 667 you have received. Now here same strikes you have to take. So here you can say 11.5 for 6, and here 6.5 for 1, and here 10 for 6. 616 you have given. Logic looks same. They are 667 receiving. Here 618 giving. 618 giving. 618 giving. What happens? What happens? Result you see. Result see. Kadu, nothing happened. Result see. Loss, 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 loss. Why it did not happen? Why it has not happened? Put case, you have seen that we have found similar thing in put. Market is up, we made the money. Here we found the similar thing in call. Market is up, we did not make money. Why? Strategy with the similar objective. Input option, market gone up, you made profit. You form the similar strategy here in call option, market gone up, you made loss. I told 500 600 point going up, it will give you profit. Why it did not happen? What makes it happen? Why it failed? Can anyone will tell? The devil lies in the entry. Devil lies in the entry. Have a look and tell. Devil lies in the entry. Why it did not work out for me? Difference in the premium. Difference in the premium. So what you received, what you paid, in between that less than 100 rupees is there. That made the theta 2 less than 3 rupees. You made zero money. Here the difference you take, here the difference you take. What you received, what you paid, in between that hardly some 50 rupees difference is there. Credit, debit. Credit, debit. Credit what you received, debit what you have paid. That is the real devil here. So real devil here, there is no difference of 100 points. Theta come to 3 rupees. So as I used to say, any strategy having a theta prospect, because this is same strike. So same strike, only difference is different month. So different month, same strike, diagonal spread. Diagonal spreads are only having the time spread things. So here both the months contracts are there. So it is vertical as well as horizontal. So it is diagonal spread. So this diagonal spread doesn't have any risk of theta, because both are any risk of delta, because all strikes are equal. It doesn't have a risk of vega, because all strikes are equal. So only part is theta. Theta is less than 5, you will get kaddu, nothing. Theta is 5, you will get profit. Whether market goes up or down, if you make theta as 5 rupees, you are going to get the profit. Whatever may be the strategy, maybe the composition are alag, maybe your these strikes are different, doesn't make any things. But this is also a part you have to understand. Fine. Anybody has any other question? I expect the answers from them, those who have joined the guided program of option strategy few months back. Can anyone will tell the strategies what we are working on this monthly options, why the same strategy cannot work in the weekly options? That is my question. Strategies which is working on monthly options, similar strategy, why it will not work in the weekly options? Fantastic. Here weekly options are what option? Exotic options. Exotic, its name is exotic options. What option? Monthly options are there? Plain vanilla options. So plain vanilla options will obey all calculations of your Greek. All calculations of your Greek formula, you can apply delta formula, vega formula, theta formula, all formula you will apply. Plain vanilla option will obey. Exotic options having no formula for Greek. Its Greek is based on what action it has given. Option rise by 15 rupees. So change in option price with respect to change in the underlying price. Nifty rise by 50. So this ratio is the 15 divided by 50 is the delta of weekly option. It is not the delta formula where normal deviation comes, IV comes, this comes, that comes, nothing. Theta different, theta also divisible. How many days are left till expiry? What is the time value divided by that theta? Theta comes in that. Vega comes in that. Based on each 1% of volatility, how much the option price has changed, that divided by this is straightforward formulas or arithmetic formulas. They are normal distribution, ND1, ND2 not there. Binomial pricing model, it will not obey. Black and Scholes model, it will not obey. IV will be calculated in a different way. So that is why these strategies will not work. But there is a way. So here all these calculations, smart IT, when you do, it gives you theta beta all calculations on the real time basis. Real time basis it will give. So real time basis you will get the theta, delta, all these things it gives. So what happens here? It gives now currently, this is symbols you have to read. This is delta, this is theta, this is vega, this is omega, this is gamma. You get it. 8 rupees is there. But each time when the Nifty jumps higher targets, theta also changes. Each time it goes to lower targets. So theta also changes. So these softwares is there. So theta also changes. So theta always negative. Vega changes everything. So here our tool gives you a real time basis. Theoretical tools you would have seen many brokers. You have many sophisticated softwares. You have very costlier softwares with red light, blue light, green light, payoff graph, this graph, that graph. They will tell theta is 800. Many things you will see here. Vega is 1400. Gamma, forget it. Delta, forget it. Big numbers. That means you want that premium to fall off by 800 rupees with a time value. So phi their theta is 800, my theta is 8 rupees. Because they have lifted it from, copied it, not lifted, copied it from theoretical book, Black and Scholes model. So that's why their value different, my value different. My software's value market will accept, obey. Their values is only for exams. You can see, clap, be happy. So that is the difference of Smart Finance product and other products. So here, this is the values you require real-time basis theta you can get. And option strategy tool gives a net theta. If you form this strategy, what is net theta? You need not have to form that how to make it 5. 5 it will automatically, 5 is not there, it will make it. You adjust it and make it 5 to happen. So these are the things. So box spread, 3 alternative, plain call put box spread with adjustment pre or post. Then alternatives of box spreads. You can make a half box spread along with some adjustments. Half box spread with adjustment with the view of a uptrend or downtrend. So if it is having a uptrend, then this will not work for the downtrend. You have to do ulta. So half box spread input in current month, debit in the year month. It works in the uptrend. So ulta will work in the downtrend. This works. This spread doesn't work in the uptrend. So ulta will work in the downtrend. So you got another 2 alternative. Now you have understood this. Have a 100 rupees of difference. 5 theta is very important. And difference, how it came, you calculate, Sabir. Because if you eat rasgulla and that rasgulla gives you a great throat pain, will you dare to touch rasgulla? How many of you are chewing the neem leaf every day? Tell me. How many of you taking a raw karela and chewing it every day? No, because it is bitter in taste, we are not taking. So anything you enjoy, you learn that. So here, majority of people, what theta beta मुझे नहीं चाहिए sir. I want कैसे profit आएगा. So profit I have told you. So this is how you should form a strategy to get the profit. Once you get the profit, then Today you get the profit, tomorrow you get the profit, 1 month you get the profit, 5 months you get the profit. Then you will tell, sir, you teach me what is theta. You told me that day theta was 5. How to calculate theta? On that time I will teach you theta. On that time you have to buy my course and pay me 3,000 rupees and learn that. So this is only after you make some profit, work on that, that time only that interest will come. You will buy my course and learn theta. So be prepared. January to till date, 2021 January to till date, test it each every month. Every month 15 दिन काम करो, लाइफ बदल जाएगा. Work for 15 days with full concentration, completely your trading life will change. Do not work, no value. Joe ways, like Parasji has told. Parasji is a very old participant. He is associated with from the Smart Finance from 2008-9. वो लोग कर सकते हैं because they have so many months of their effort they have put. They are fit to take that challenges of alternative implementation of strategies. Those who are starting now, what I'll tell, do not deviate, क्योंकि पहले तो ABCD सीखना पड़ेगा, ABCD. So जो whatever strategy is being given, practice that from 2021 to till date. Practice. Then implement. Then slowly learn theta, learn vega, learn alpha. All those things, start learning. Learn different way of adjustment to do. I have given you how to make adjustment. So that process you can improvise. Not beginning में सब कुछ कर